Hi everyone, my name's Darryl Payne, CEO of As Good as Gold Australia, and this evening once again I'm joined by my brother Brian and partner at As Good as Gold.
Thank you, Darryl.
And tonight we speak to an absolute icon in the precious metal space. So I speak of none other than the one and the only Bill Halter, precious metals broker with Miles Franklin. Good evening, Bill.
Good evening, Bill.
Good evening or good morning to you.
It is too. Oh dear, a lot's happened, Bill, since we spoke last. It's been a few months now. Amazingly, time just got away from all of us, I think. And precious metals, of course, during that time hit an all-time high, January 21. I've slipped back since and consolidated as we speak, and we're now looking forward to advancing to a new high. So, Bill, we have a number of questions for you, but we thought we could only fit 5 or 6 in.
See how it goes.
But Bill, look, since October 2025, that is, China seems to have a new strategy to some degree in ceasing the exportation of gold and silver out of their country, and just as importantly, importing more gold than they ever have before. To do this, China has been selling US dollars to buy gold. Bill, what do you believe they're planning here to achieve moving forward? What's their plan?
Well, I think that's simple. I mean, all you have to do is look at what the BRICS are proposing. I mean, they're proposing a commodity-backed currency. 20 to 40% of the backing is going to be gold. And I think China sees the writing on the wall. They realize that the U.S. is a bankrupt entity. That bankrupt entity issues the world's reserve currency. When the shit hits the fan here in the United States, the dollar's going to have a problem. Central banks all over the world are going to have a problem. And they're trying to sidestep that problem, if you will, by lowering their treasury reserves and raising the gold portion of their monetary reserves. You mentioned that China has ceased exporting gold. They really didn't export gold for many, many years, but they did export silver. And as of January 1st, as I understand it, January 1st of this year, 2026, they stopped exporting any silver. So really, what they're doing is they're trying to bolster, if you want to call it, their reserve position, the amount of gold and silver within their borders, because they understand that the paper dollar system is going to burn to the ground.
I mean, this is common sense, really, as Bill quoted earlier. I just can't quite understand why the US, and we're going to be talking about that later. I've got a question that I need to ask you about Fort Knox, but they're under a lot of pressure at the moment, and they seemingly have no reserves. I mean, nearly $40 trillion in debt. China seems to be just a lot more economically smarter than the US. We'd have to agree on that, wouldn't we?
Yeah, I mean, you said it's common sense. It's not rocket science.
No.
Gold is money. Gold is money that can't default. Gold is money that cannot be printed. Dollars can default. Dollars can be printed. You bring up Fort Knox. There's not been an audit since 1956. I can show you on the back of a napkin how China has probably a minimum of 40,000 metric tons versus the U.S. supposedly having 8,300 metric tons. China, at some point in time, and I think that's probably quite soon, they're going to have absolutely every incentive to mark up the price of gold, because that will be their largest reserve asset and most important reserve asset, because it's hard money. It's not a fiat currency.
Yeah, definitely 100% correct there. Bill, before I ask a question, I've just, Daryl and I, obviously, we are in our 70s. We've lived in Australia all of our life, and we just think Australia is a fantastic country. You must think the same about America, but do you, within yourself, do you have another, let's say, home to go to if you just don't like what's going on in the United States?
I guess I should say I've been there, done that. I left the United States. I retired at 46 years old, left the United States with my family at the end of 2006 because I saw what was coming in 2007, 8, and 9, the great financial crisis. I lived in Costa Rica for 5 years. It looked like the immediate problem had been not fixed. They haven't fixed anything. They papered it over. They added more liquidity and kept the system afloat. But my Spanish got good enough to understand that if you're a gringo and I was living in Costa Rica, if you're living in a Central or South American country, and I think it's pretty true, probably anywhere in the world, but my Spanish got good enough to know that they really didn't like gringos. They smiled at us. They were pleasant. They enjoyed us spending money. But when the system goes down, for instance, Costa Rica, 100% of their central bank reserves are U.S. dollars. So if the dollar goes down, their central bank is going to collapse.
Yeah.
And it's total lawlessness. And I can pretty much guarantee you that gringos will be targets. Doesn't matter if you're on Social Security and you're making $2,000 a month and that's all you have, you're considered rich. So I decided to come back to Texas. Whatever's going to happen, I'm going to do this shoulder to shoulder with people that have the same accent that I have.
Yep, I understand that.
I don't have an escape hatch plan. My plan is to fight it out here.
Yeah, well, that's a good plan. I think it's a good plan. Okay, Bill, the British economist and our advisor to As Good as Gold, Alasdair Macleod, has continually said it is not gold and silver going up in price, but the US dollar losing value. There are numerous graphs showing since the Federal Reserve was instigated, the US has lost 98% of its original value. Do you believe that all of us should be saving in gold and silver, and especially silver? And again, what I mean by that, maybe how much cash. I don't have a lot of cash, but I have enough to pay the bills, and that everything else is in gold and silver. What's your thoughts?
I think that's spot on. When people ask me how much should I put into gold and silver, my standard answer now is whatever you don't want to lose. If you're saving in dollars, or you're saving in euros, or British pounds, or Japanese yen, what have you, if you're saving in fiat currency, when this thing goes down, currency across the board is going to burn. And you either have gold or silver, or you're not going to have wealth when this thing reboots. So Alistair's 100% correct on an ounce of gold today is the same ounce of gold that was 100 years ago, and it's the same ounce of gold that's going to be in another 100 years.
Yeah.
What changes is the measuring stick.
Yeah.
And the measuring stick is now the currency. And if you go back 50, 100 years, think about the names of all these currencies: the British pound, the peso, the lira. Those refer to weight, either the weight of gold or the weight of silver. All of these currencies were originally derivatives of gold and or silver. So they were spawned from gold and silver. Now, over the years, what has happened is the powers that be, the governments, have gotten people to believe that the paper currencies themselves are money. They're not money, they're currencies. Gold and silver are money. They can be used as currency, but they're money. They're what you save with. They, in fact, are the measuring stick. The way to look at, and I'm going to use US now rather than Australian dollars. Well, right now, it's not $4,000 gold. Dollars are 1/4,000th of an ounce of gold.
Good point.
When 5 years ago, there were 1/300th. So just this century, just in 25 years, the dollar has lost, what, 93, 94% of its purchasing power versus gold. And that's the way to measure the dollar. That's the way to measure the relationship between gold and silver and the paper currencies.
Yeah. Very valid points there.
Absolutely. Bill, I mentioned Fort Knox just a little earlier. And I just want your thoughts, if we could, on what you believe has happened to the Fort Knox inquiry, where the United States President Donald Trump and Elon Musk were planning a visit some time ago. I believe Donald Trump stated that he would gain entry in 24 hours of the request and instigate an audit. Now, nothing seemingly has happened since. So I know what I find really surprising is that, and you mentioned a figure of 8,300 metric tonnes. So if that was confirmed to be held in storage, then this would be super positive for the US. But that hasn't happened. Again, your thoughts?
Now, well, first off, they could do an audit and they could find 8,300 metric tons. I don't think that's the case. Well, let's say they found 8,300 metric tons. Then the question is, who owns that metal? Has that metal been rehypothecated? Has it been leased out? Who's the true owner? I mean, we know for a fact, up until what, 2004, 5, 6, central banks all over the world were leasing gold out. And they were doing that to, look at the Bank of England. They sold all their gold, or not all of it, but roughly half of their gold. They leased them out thinking they were going to get income for it. And the question is, did they or have they gotten that gold back? It has that trade unwound. So first off, there's not been an audit since 1956.
Yep.
I mean, that is so highly suspect. And they say, well, we can't do an audit. It's too expensive. It'll cost $20 million a year. Well, $20 million a year is nothing. It's not even salt and pepper on top of a dinner. $20 million, I mean, they built bridges for more than $20 million that go to nowhere. So it can't be the cost. It can't be the expense. And again, common sense tells you if you're not doing an audit, there's probably something behind. What? I'm not sure. I'm not going to speculate on it. But if they've not audited in my lifetime, I wasn't born in 1956. If they've not done an audit in my lifetime, something smells bad.
Yeah, I think it's a dead giveaway, really. I mean, if you're not prepared to do that, I mean, obviously, at the time, Donald Trump was very keen to do so. But I would say that he has been advised by a higher authority, back off. Either the gold isn't there, or as you've said, if the audit's done effectively, who owns it? Too many question marks. Yeah.
There's one other thing to that. Let me just add to that.
Yeah.
Even if we did have an audit, would the rest of the world believe it? Would the Chinese believe it? Would the Russians believe it? I mean, it would have to be a completely transparent audit by an independent entity, maybe a group of worldwide auditors that can't be, pushed on from, U.S. auditors being pushed on by either the administration or whoever. So I truly believe, and I think this is going to happen because when the BRICS currency does go live, I've always believed that here in the United States, we're going to hear, okay, here's our currency. We're showing you the backing. We're showing you the reserves to it. And here's the audit to it. Now you show us yours. And that's going to be a big problem, I think.
All right. So,
Yeah.
yeah, I'm not quite sure if you know what Bill said there, but yeah, China will come out all guns firing and with audits and everything else. And I understand where you mentioned right at the beginning, China having 40,000 tonnes would not surprise me at all. I mean, even Alasdair Macleod has mentioned just on the back of an envelope 35,000 tonnes. So there's now we've got two people and really know what they're doing, and Alasdair and Bill, talking the same numbers. So, it's going to be very interesting days. And, look, a gold. I've always thought a gold standard has to be implemented for any of this to be fixed up. But it's going to be in between. The in-between days are going to be very hard to deal with. Bill, China has now in place gold clearing systems with vaults in Hong Kong and Saudi Arabia, and rumours about several places in Southeast Asia. It seems that they are working towards having their own currency, which would be backed by gold, so trading can continue without the US dollar involved. I know we've covered a little bit of that, but Bill, your thoughts?
Yeah, no, 100% correct. China is trying to wall themselves off. The Brits are trying to wall themselves off from any collapse of the dollar. They want to be off the railroad tracks. They want to be on their own railroad track. China wants the gold trade to move toward the physical side of it. They've actually announced, I think it was a week, 10 days ago, they had 4 or 5 major banks tell all their customers, as of July 24th, there will be no more rehypothecation of gold on mainland China. No more futures trading, no more paper trading. And I think part of that is a result of what happened back in February and March, where there was massive short sales that turned out to be naked, and they were well above the position limits. Now, that happens all the time in the US, and the CFTC never does anything. But China basically shut those traders down, and now they've gone one step further. They're closing that market. So they don't want paper trading. They want physical trading to determine the price. In other words, the dog wags its tail as opposed to the tail wagging the dog.
No.
Yeah, I somewhat familiar with that bit of information, and I don't think anything's going to happen on July 24, but I think between July 24 and the end of the year, there are a lot of things are going to be happening, and it's all in China's favour, without a doubt. Moving away from China, Bill, when we talk about a country's GDP, unfortunately, it includes government spending, which makes no sense to me, because government income either comes from taxation, which is derived from private profits, or by borrowing, which again, an interest rate is attached. Now, apparently, the debt to GDP of the G7 nations in the 1970s, just after the decade after we went off the gold standard, the debt to GDP of the G7 nations was averaging 45%. Now, the same G7 nations, it is 125% debt to GDP. Surely the bond yields are going to rise due to the greater risk. What's your thoughts?
I'd like to check the numbers, because I think the debt to GDP of the G7 is far higher than 125%. The US is at 130, and we issued the reserve currency for the world. And I mean, go back 50 years. 50 years ago, any nation that got to 100% debt to GDP, they were stepping through the threshold into Banana Republic land at 100% debt to GDP. I think Japan is what, 300+%?
Yeah, they are monstrous.
I think that number of 125 is way low. I'm thinking it's pushing 200 or through 200 if you average all the G7 nations. And you sound like me over the last 5 or 10 years. I've talked about this, and nobody really cares about it, that if we're running a deficit, if you run a deficit of 5% a year, a, a, a budget deficit means the government's spending 5% more than what it's taking in. That money gets spent. When that money gets spent, it becomes part of GDP. What happens if that money was not spent? If it was not borrowed and it was not spent, then that particular year would go down as a recession. I mean, if you've got 2% growth or 3% growth, but yet 5% of the growth came from borrowed funds, without those borrowed funds, it's a negative year. And there's only been 1 year, 1997, and that was done with smoke and mirrors, that the United States actually had a surplus. I think it was 20 or $30 billion. But since 1960, pretty much every single year has been a deficit. If you strip away those deficits, yes, you can see growth, because you can see them building things. You can see people employed to build those things. But what they've done is they've built and nurtured a debt bomb that's going to explode. And when it explodes, anybody who's in the system and has done what they've been told to do, go to work, save 10%, put it in the bank, save another 5% or 10%, whatever, put it in your retirement account. Those are paper assets. The vast majority, 97, 8, 9% of the people out there don't invest in gold or silver. They invest in paper assets. And if you have a meltdown, the problem is the institutions themselves are going to go out of business. And Australia is part of the West. And the West has written laws, and they're all on the books now since 2014, that when an institution goes down, it can take its customers' money to save themselves. This is the great taking by David Rogers Webb. If you put money into a bank, you are no longer a depositor. You're considered a lender. If you put money into a brokerage house and you buy stock, that is not legally your stock. It's legally the broker's stock for your benefit. So when this thing goes down, people are going to find out that their institutions saved themselves with customer money. And it's totally legal. It's immoral. It's not right. It's a bad law, but that's the law. So, people need to think about that. You want as few intermediaries between you and your money, because when things go bad, your money's going to be pulled right out from under you.
Yeah. To add to that point, is obviously the United States sells its bonds to bring in more money to develop the United States and whatever. And people in the past have been okay with that, because on that bond it releases an interest rate. But I can't see this interest rate being so low anymore. I think if sovereign countries investing in the United States, buying its bonds, they'll want a larger yield, a larger interest rate on that bond to be able to, risk their money. So, yeah, I honestly think that interest rates are going to go up, not down in the near future. Your thoughts?
I when you say the near future, I have no idea what central banks are going to do, whether they're going to raise rates, lower rates. What I do know is the last few times that the Federal Reserve cut rates, bond yields went up. And the next time they cut, if bond yields go up again, the marketplace is going to look at that with, and you're going to have a bad look if rates go higher after the Fed cuts for a third time. There's no risk premium. It doesn't make sense to invest your money in a 30-year bond at 5%. It makes no sense whatsoever. Yeah, the government says, oh, well, inflation's 3% or 4%, and you're getting 5% on a bond. First off, inflation is not 3 or 4%. Inflation is much higher than that. That's the first thing. But the second thing is because we have this debt bomb that's about ready to explode, the only tool that they have is to print money. And printing money itself is inflationary. And they're going to have to print literally trillions to keep this thing from exploding. Go back to 2008. The Federal Reserve lent $16 trillion, and more than half of that outside of U.S. borders to keep the financial system from imploding.
Yeah.
Other central banks did the same thing. What I missed in 2008 was I never believed that the central banks would bankrupt themselves or make themselves insolvent in order to save the system. But they did. Now, if you look at their balance sheets, the question becomes, who's going to be the white knight that saves the central banks? There is none.
No. The future doesn't look good as far as central banking is concerned, and it's more, obviously it's something big that's going to happen, and I think if there's not a recession, it could be a depression, but whatever it is, it will force America and other G7 countries, because China's not in the G7, so they will force the G7 nations to actually look at themselves and say, what worked before? What financial system worked before? And they have to come up with what China's come up with, gold and silver.
Rick Rule. I was listening to Rick just recently, and I would normally suggest that Rick Rule is a fairly conservative person and doesn't like to make extreme statements, outlandish statements. But he was saying that his expectation is, he was looking at silver in particular, and he said, I expect over the next 8-10 weeks that silver could lose a little bit of ground from where it is now and go below $60 US. It could. But he said there's some really positive signs there that he's saying by the end of this year, his expectation is that silver could quite easily be back to its all-time high prior to January 29. What are your thoughts about precious metals so far as they're in that consolidation phase? How do you feel about Rick's comments moving
I
forward?
agree with him. I think by the end of the year, we will be at all-time highs for both gold and silver. Gold and silver were definitely due a correction back in the end of January. They were helped, if you will, by naked shorting of paper contracts on COMEX, LBMA, and we come to find out also the Asian markets. China actually shut down quite a few traders because they sold paper contracts naked short, and they were above the limits that you could hold either long or short. So the paper market helped push metals down. I think it's way overdone here. I think the current prices are a gift. You've got gold at 4,000. You have silver just under $60. And in silver's case, we know that it's been in a structural deficit, supply-demand deficit, for this is now the 6th year. And you're probably talking in the total of the 6 years, it's got to be over 1 billion ounces. I mean, where is there a stockpile of 1 billion ounces of silver? Gold is stockpiled by central banks. Silver's not. Silver's used.
Yeah. One big difference, isn't it?
Yeah. And I guess what a lot of people don't understand either is that, if one goes and checks the graphs and I look back at the 1971 to 80 period, and I know it's a different era, but at the same time, when silver went up over 9 years, 3,600%, what people probably don't realise is the dips along the way represented 50% of that overall gain. So the expectation from people out there is that, it just keeps going in a straight line. Well, nothing ever does, of course. So wouldn't be wonderful if it did.
Yeah.
But it didn't stop silver from appreciating 3,600% over that 9-year time frame.
It doesn't matter whether it's silver or what. Gold markets are notorious for having short pullbacks and shaking people out.
Yep.
It's bull markets, the pullbacks are causation for people to jump ship and say, I can't take it anymore.
Yeah.
And I've told people, if you understand the math, and this is math, that the West is going to collapse financially. It's not Bill Holter's opinion. It's pure math, and it's 100% going to happen. If you know what the ending is, position yourself for the ending, and how you get there, it doesn't matter.
Yeah, no, I agree. When I first started buying gold, Bill, it was sitting at, gee whiz, what was it now? $400 an ounce, $390 an ounce, and now we're just under 6,000. But it's over an extended period of time, and I knew that. And same with silver. Silver was $6 an ounce, and now it's 85. Aussie, I'm talking at the moment. But the great thing about precious metals is, and nothing else can boast this, just put it in a box, leave it there, and it'll continue to go up. And it'll go up, as my good friend Peter Daniels would say, all gold does is, and silver the same, all gold does is confirm the ongoing mismanagement of governments and the debasement of fiat currency. That's it. So you can rely, will it continue? Of course it will continue. So, and yet you've got people who, will it happen this time?
Yeah.
Yeah, see, gold and silver can't bankrupt. That's the most important part. You cannot default. And that's most important right now because we are on the cusp of the world defaulting, if you will.
Yeah,
without a doubt. It's the only money that can't be defaulted on.
Yep. Thank you again. It's been a while, as we mentioned before, but let's make sure it doesn't. There's a much closer gap this time between now and when we speak again. It'll be fantastic. But look, this is a wonderful opportunity for whoever has been observing this presentation today. There's an opportunity here to connect with Bill Holter. And he's a very smart man. He's a very well-educated man in this space, phenomenal. Bill, if people want to make contact with you, they're interested in purchasing gold and or silver, where do they go?
You can just go to my website. It's billholter.com. There is a contact button on the site. If you want to contact me directly through my business email, it's bholter@photon.me.
Look, take advantage of it. If you're viewing this now, take advantage of it. Bill would be a wonderful go-to for you right now. Whenever I think of Bill Holter, I think of Jim Sinclair. And Jim, of course, was Mr. Gold, and Jim passed. That would have been going back probably a year ago now.
No.
Actually, 2.5. It'll be 3 years this October.
Right. And I believe, wow, what a great man he was. I mean, he would always say, well, just become your own central bank, do what they do. Makes sense. They all own gold. And I believe that Bill has now taken over the mantle of Mr. Gold.
Mr. Gold.
As was...
Great news.
Which is fantastic news. And look, as I said, what an opportunity to connect with somebody of Bill Holter's stature, and just take advantage of it. Don't miss out. Do not go down with the sinking ship. I guess all I can do now is say thank you, Bill, for your support. It's been ongoing, love it, and we'd love to catch up with you again very, very shortly. And to all our viewers and subscribers, thank you very much for supporting the channel. Stay well, stay focused, and goodbye for now.
And goodbye for now.